And welcome out to our halftime report here on 3/18/2020. It is Tackle Trading's daily show where we break down the markets. We talk about what everything's going on out there. And quite frankly, four of us are in Utah, and we actually also had an earthquake this morning. So we're extra on guard today. Matt, how you doing, my friend?
Yeah, today kind of was a really weird start to the day. About 7:10 in the morning, we got hit by a 5.7 earthquake here in Utah. Epicenter was right here in Salt Lake City, and I think everybody around the valley kind of felt it. And now, everybody's on edge a little bit. Don't know what's happening with real news or fake news, but there's some warnings of perhaps another earthquake. So we're all kind of on edge right now.
Yeah.
This is not the day to quit smoking. This is not the day to quit smoking.
I think there's a counterpoint to that every day is the day to quit smoking, but I get you, a little bit of anxiety for sure today. Noah, obviously a lot going on in the markets. We're going to be swift through this today so that we can all do the necessary things we need to prepare if there is more earthquakes and aftershocks that come through here in our houses. So let's break things down one step at a time here, Matt. Let's start with the S&P 500. Big thing, obviously, we're limit down again. This is now, how many days have we had limit down this last month? I mean, what is it, 4 or 5?
Well, not last month, the last couple of weeks. I think we're on 1, 2, 3, 5. I think we're on 5. 1 limit up and 5 limit downs, I believe we've seen.
Yeah.
Now, on one of those days, we had multiple ones, but yeah, it's. I mean, guys, the average movement in the S&P 500 is close to like 4.7% right now on a daily basis. This is truly unprecedented. And obviously, we got news to talk about today, but I want to break down this the chart on the S&P 500 from an intraday perspective, just to kind of show you what is happening and what the market's really kind of fighting for here. What you're seeing here, obviously, the market has been selling off from yesterday's close throughout the Friday evenings and the pajama traders. And as you can see, we did impact limit down here on the intraday perspective. But what the market's really kind of clinging here today, and if it doesn't hold, it could kind of spin out of control. You're looking at a very, very important support level right there at about 2350. As you can see on the gap down, that's where it came into, retested it here on Tuesday. And obviously we're retesting it now. And I mean, just one of the problems that we've been faced with in these types of environments is once these support levels break, there's no real support levels on that daily chart. But if you kind of break this down, looking at that 3-year weekly chart, we are actually testing that lows of that one-day bear market on December 24th of 2019. And so you're at a very, very important support level that if it is broken, you truly don't have any more major support levels until you really kind of look into that significant whole number right around 2000, which just so happens to be when Trump took office here in obviously the election of November in 16 and so on and so forth. So we're sitting at major support levels. Looking at the Dow Jones from a technical perspective, obviously 2000 is going to be a significant whole number. You kind of saw it hit that 2000 multiple times, kind of retested that on the cash open, and now you're fading down on the intraday chart as well. So a close underneath 2000 would be significant in my opinion. There's no support levels there on the weekly chart. When you look at the 10-year weekly chart, you really don't have another support level until you get around 18,000 on the Dow, which obviously in this marketplace could be 1 to 2 days from now.
Obviously, technically, I mean, there's a disaster here going on. I have no idea where the bottom is. I mean, we've talked about that. I actually think it's kind of a waste of time to even try to pontificate where these lows are going to end up, Matt. We're in a crashing market. Do they consider closing these markets down?
I'm sure they've talked about it. I mean, Bill Ackman came out today and said, shut it all down, shut down the U.S. economy, shut down, basically quarantine everybody for the next 2 weeks, shut it literally all down and watch the numbers plunge and the market will start buying when you come out of it. I don't think we're there yet, although we've started to see that a little bit around the world. I think the first thing you'll see is a short-term basically shutting down the ability to short the marketplace. That certainly could happen. And the last time we did that was in the financial sector in 2008. But these things, these radical emergency things do not calm markets. So I disagree with Bill Ackman on shutting down the marketplace. Every time they've taken a radical approach to this marketplace, the market has sold it in every single capacity. Keep the market open, let the market find support, let the market price in whatever the reality of the future is, and we'll handle it. I get it. 401ks are being destroyed right now. I understand that, but these things, but at what point do you say, you got to let a free market be a free market? I mean, they weren't shutting it down when they were appreciating 400% over the course of the last 10 years. And now, 1 month after we hit a top in the market, we're all talking about shutting down the market. I think it's premature.
I do as well. I mean, Mark, I think one of the strengths of the U.S. system, quite frankly, is our financial system, not just our economics, but whatever it is. We have markets that have barriers in place. We have functions in place that are here to protect us from this. Do you think that they're legitimately talking about shutting the market down?
I think there's a great resistancy to that. But to say anything is out of the realm of possibility in this unprecedented thing would be naive, right? Like it just would be naive. Like how many politicians and talking heads and business executives and CNBC personalities over the last six weeks have said nothing to see here, nothing to see here, nothing to see here. No. And people change their tune quickly, don't they? So could we be heading at a market shutdown at some point? To say that you might not I think is just naive.
Yeah. Well, I mean, things can change quickly. If that conversation, because I did see the thing from Bill Ackman, Matt, and that's why it's on my mind as well. He's coming out. He might just be talking his book and losing so much money.
I think we've talked about it in this more than the U.S. government has, more than the exchanges has. Yeah. Just because Bill Ackman, who is basically probably getting his teeth kicked in and his hedge fund is saying shut it down and he's trying to capitulate, doesn't mean we're going to do that. So. Yeah. To me, there's far more important subject matters to discuss in this environment today.
Which probably is going to be with the stimulus here. Obviously, overnight and in the last 24 hours, they've been talking very, very directly about stimulus programs that include broad measures, Matt, direct money to consumers, money for airlines, things like that. Explain what's happening there with stimulus and what we know.
Well, what we know right now is we know what is being proposed by the Trump administration. It's a $1 trillion stimulus program. Obviously, there's going to be internal discussion and debate amongst the Republicans, amongst the Democrats. And from what I've gathered is that the Republicans are split right now in terms of exactly how they're going to go about, putting this cash injection into consumers' hands. So it's going to be interesting to see what the final bill kind of looks like. But yes, we should get ready for a fairly substantial fiscal stimulus coming out of the United States government over the next week or so, maybe even sooner than that if they come to an agreement sooner. But what it looks like, Tim, as of right now, is we're looking at about $300 billion in small business lending, payroll tax cuts, credit easing, about $150 billion in potential bailouts to industries who have been impacted based on the corona situation. Boeing is going to get their $60 billion. Trump said yesterday that they're not going to let Boeing fail. They should let Boeing fail, but they're not. And probably most likely for, the defense contracts that Boeing has with the U.S. military. Airlines are going to get about $50 billion. And that other $150 billion is probably going to go to travel-related companies, hotels, maybe casinos, whatever these industries that have been truly impacted. But the big one here is what has been really kind of building up a lot of steam lately is there's looking at 2 cash injections into consumers' hands over the course of the next month and a half or 2 months. The first one is a $250 billion stimulus coming into consumers on April 6th. The second one is a $250 billion coming on May 18th. The U.S. government also eliminated the ability to be foreclosed on by the end of April, and you cannot kick out tenants out of your rental properties by the end of April. And I expect those to be extended as well as this situation expands. This is not going to be a 2-week situation unless the government takes a little bit more aggressive response. We've seen countries around the world eliminate the ability to pay your mortgage, and you might have that discussion in the U.S. as well.
Yeah. You know, the down below 20,000 is obviously a key level, and markets are down 4, 5, 6% across the board. The Russell continues to show the most weakness, down $1,000 on the Russell, by the way. Really, really incredible on the selling. Where these bottoms
Well,
are, I don't know, but yeah, look at that rut, Matt. Isn't that
and the
unbelievable?
Russell is just an absolute free fall, no doubt about that. Obviously, small mid cap companies here that we're talking about that don't have the cash reserves like an Apple or a Google or Microsoft or a Facebook to kind of handle these types of situations. You're not talking about your mom and pop type shops here. You're talking about $2 to $10 billion market cap companies. Well, let me rephrase. Used to be $2 to $10 billion market cap companies. They're probably more like $1 to $5 billion market cap companies. But you're looking at on the Russell 2000. I think you're in some danger zones here on the Russell 2000. If it cannot hold this very, very, very significant whole number right there at 1,000, you see it on the intraday trying to clean to those levels. I mean, to close underneath that 1,000, you could see some more free falling in the Russell 2000. No doubt about that.
And I think this area of the market obviously has a lot of risk of bankruptcy and all those kind of things if they don't get cash injections and bailouts. And a lot of that money going directly to workers, they might have been working for companies about this size, retail firms or whatever it might be. I heard.
And let me just very quickly, Tim, because I think when you're talking about market shutting down, people don't understand what that means. Maybe spokes, put a little fear out there. No, you don't have to shut your trading account down, Daniel. If they do halt trading, it will be for the extremely short term, and they just do it as a way to calm the markets and so on and so forth. So even when they shut down shorting in the financial sector, guys, in October of 2008, they kept the markets open, and you could still, focus on your trading and so on and so forth. So I don't expect markets, even if they do, stop shorting, it will be in the short term. If they close markets, remember after 9/11, we closed the markets for about 4 trading days.
Mm-hmm.
That happened on Tuesday morning. The exchanges were shut down on Wednesday, Thursday, and Friday. Markets reopened on a Monday. Things were fine. So there's nothing to panic about there.
Well, and it's just an argument from one side to try to get things to alleviate.
Well,
I don't think it's going to happen.
Again, people like Bill Ackman put that out into the social conscious, and then people get even a little bit more freaked out about it.
Mm-hmm.
So I just think we need to be a little bit more cautious with our words there.
Yeah. Yeah. Matt, here with the Russell, it makes me think of companies that are going to be laying people off. Mnuchin, who was not cautious with his words, I think he came out very directly on this, probably to try to get the bill passed and get the funding done immediately, said the unemployment can go to 20% in the short term. Did you read that data point and what he said?
Yeah, I mean, could unemployment go to 20% in the short term? Yes. I mean, you certainly could see, certain industries get hit really, really, really hard while other industries don't. I heard Amazon's hiring a ton of people. Walmart's hiring a ton of people. So we've seen other companies come out and say, yeah, we're hiring. There are certain industries like casinos, like travel, like airlines, like, these types of car manufacturers. GM and Ford and Chrysler struck a deal with the union today to reduce the manufacturing that they're going to be doing over the course of the next month or so. So in the short term, could that be impacted 20%? I don't know where he's coming up with that number, but I'm willing to bet that a little bit of that is propaganda, Tim.
Yeah, I think so.
And it's propaganda to push the politicians to take action on the $1 trillion fiscal stimulus program and to get them to act fairly aggressively. So you can call it propaganda, you can call it a negotiating tactic, but I'm not sure where he came up with that 20% number.
Yeah.
And this is a time where you are finding people that aren't analyzed. Like the one thing we do here is we analyze. We try not to be reactionary. We try to give you what it is. You're going to hear a lot of stuff in the coming days, weeks, probably already are. People just pulling things out of thin air. People just throwing things around. And you're going to hear things on social media. Get it from trusted sources. I promise you. All we do all day long is talk and analyze about what's going on and give you our best assessment in an unbiased format. I just trust us on this compared to what don't trust social media. Even if you don't trust us, don't trust social media.
Well, unless it's us on social media, then you're cool.
Yeah. Well, I mean, here's the thing. There's a lot of wild things going around out there right now. Obviously, even just volatility in the price. Forget the headlines, guys. I mean, look at crude oil today. Bring up crude right now if we can. Let's analyze this one. We've been having this discussion internally. I love our internal discussions, Mark, no doubt about it. We've talking about where's the bottom in crude. Matt, you made the statement the other day, wake me up when it's at 15 bucks. So here we are at 22.95. Pretty incredible sell-off even here today. We're down 15% again. That broke that K channel. We talked about the K trade a week ago, and here we are now down at new lows. Global recession is being projected by many firms, including Morgan Stanley and Goldman Sachs. I think it's pretty much a foregone conclusion at this point. Where in the world would you guys be interested in crude oil? I mean, it's in free fall.
I'll just tell you this. If anybody was attending the coaches show from last night, they probably understand exactly what Keith King has been doing here today in the crude oil market, trading on that 15-minute chart coming into the 9 EMA, obviously triggering on that 2-minute chart. But I just want to give a quick shout out to Keith King. It was an amazing coaches show last night, and I'm willing to bet that our clients and our team had a tremendous amount of education based on what Keith was doing. But where's the bottom here in crude? I've heard some analysts basically state we might have negative crude prices, and I disagree with that, obviously. But you haven't been down to these levels, Tim, and around that 22 handle since really kind of after the .com crisis. And so when you're looking at crude oil trying to find a bottom, and it's very, very difficult trying to find a bottom given the fact that we don't know exactly, what MBS and Putin are going to be doing, but you really haven't seen prices this low since really kind of after that .com crisis here when you kind of came down into that 24 handle. During the height of the crisis at the very bottom, you kind of came into that 16 handle, and then over here at the very top of that market it was 12 to the $13 range. Where's the bottom? I don't think anybody should try to pick a bottom in crude oil or energy stocks or the stock market as a whole. I mean, to me, we got to see the volatility subside. We got to start to see, support levels actually hold more than one day or more than on an intraday chart. But yeah, I will be interested in crude oil in that $15 range.
Yeah. Mark, would you be interested in 15? Depending on how things play themselves out and all that kind of stuff. Is that kind of where you're targeting as well?
No, and I mean, it is hard to know what fundamentals look like tomorrow in this market, let alone at whatever price level. I'm sticking to my stubborn worst of it is over, mentality.
Mm-hmm.
I think even after the worst of it is over and you can come to an objective thing, you're still going to find price levels that you like for the long term.
Yeah.
Now there is a point where crude oil reaches where you're like, screw it, I'm buying and holding for the long term, even if the worst of it isn't over, because the price level is just at a point where you're like, I'm in it. I might be stuck with this money tied up for a long period of time, but it's just too good of a price at a certain level. And when that is, well, at this rate, we'll find out.
We'll find out pretty quickly. I mean, who knows how quick it might actually get to 15. I mean, at the pace that we're at, Matt, that could be within the short term, and we don't know what this volatility can do. And by the way, you can get big, massive snapback rallies too. Volatility is volatility, both up and down. Right now, we're in a bear market on commodities and stocks. Move on to the dollar. I do want to talk about the currency markets here. Breaking out of 100, Matt, for the first time in quite some time. What a tremendous run. Biggest candle right there on the chart. And by the way, strength of the dollar against even like international currencies like the real or the peso and whatnot is even bigger than it is right on that chart against major currencies. How do we read the dollar here, Matt?
Again, we talked about it yesterday, talked about it last week. The dollar right now is seen as the number one safe haven in the currency world. And when you're looking at what's happening, especially in the Eurozone and especially in the UK, it just asks the question, which one would you prefer? The euro? When there's literal chatter about the Eurozone going away, the UK, where the spread of the virus has been impacted even more than in the United States, or America, whose economic standing, although we will be going through a recession, Europe and the UK, we're already going into a recession going into this situation. So I think it's just I think you're seeing a lot of money coming into the dollar, because you're seeing capitulation in the British pound, and you're seeing a little capitulation in the Swiss franc, and you're seeing a little bit in the euro.
Yeah. And by the way, the commodity backed currencies like the CAD, the Australian dollar, the New Zealand dollar, they're all just taking it right on the chin. And in fact, bring up the dollar CAD cross pair if you can. I heard Canada closed their borders mostly, from what I understand. Noah, you read that news, is that right? They did close down.
No, I was reading that or actually Michael Knott in our in the Traders Lounge this morning was saying that they actually suspended mortgage payments, but I think they have closed down borders as well.
Yeah, the U.S. and Canada did come to an agreement to close borders for anything non-trade essential.
Yeah,
so
trade is still happening.
Trade is still happening between us and Canada, but there's no travel right now between the borders.
So economic transactions are still happening and companies can still move across the border. That makes sense. The dollar CAD cross pair here breaking out, rallying, showing so much strength. That makes so much sense, Matt. When the Canadian dollar is so sensitive to oil prices, we just looked at that chart just a few minutes ago. Oil taking it on the chin, the dollar showing a lot of strength. I get why people are piling into the dollar, but I think the point that we've made many times about it being a relative measure against other things got to be said. I mean, there's still all of this fiat currency.
But you might have an exception to that. Like, I think we all buy the relative argument, the up, down, and all that. The flight to safety this time feels a little different. It feels like it is a genuine panic flight to safety, other than a positional, let's move to safety just to be careful. This feels like it's like a mass rush on the soup aisle at Walmart.
Matt, can you remember the last time the dollar had a 2.5% percentage day against the CAD, or even the index moving 2% like it is right now?
No.
It's unbelievable.
Currencies don't move like this. And to see the dollar index in like literally just the last week and a half, go from 95 all the way to 101. That truly is a historical movement. Now, the strength of the dollar is going to have a economic impact that will hurt from an economic impact, but it will help from a consumer spending perspective. And so you have some pros and cons there. And in this environment, obviously as a consumer in America, we should want a strong dollar right now, just from a consumer perspective, because it does give us better buying power.
Yeah, gold is down just a hair here today, trying to find that support down at 1450. That flight.
Did we just hit a breaker, guys?
Let's take.
I'm seeing my numbers stop moving on both my platforms.
What was that breaker number?
I thought it was 7%, but I'm only seeing down 6 points.
No, we did not.
No, we haven't hit a breaker yet.
Nope, we did not.
Reset
Sitting on support. Yep.
Go to a 1 minute chart.
I mean, the ES is down 5.63%. It has to go to 7, right? And then 13. We didn't.
Yeah, but I'm not seeing bid-ask spreads.
Yeah, I'm not seeing any movement.
I'm not seeing movement.
Yeah, it just moved.
No new time and sales coming in.
Yeah, they might have flipped the breaker. I'm not seeing any bid-ask spread.
Well, yeah, I'm not getting a message from Tosh yet. Not seeing it on my news feed. Interesting. We'll come back to it. We'll know within a couple minutes. They'll alert us and let us know. But let's keep working through the market.
Yeah, I don't have my real account up either.
Back on the daily chart, if you can here. The case for gold doesn't really change on a day-by-day basis. It is trying to hold support here. And we did just hit a breaker. I just got the message.
Okay.
Yep, we did. So the SPX down 7%. They must have ticked down there, and they did drop it for 15 minutes, which will let us work through it kind of methodically.
Traders in timeout next 15 minutes.
Timeout corner, yeah, for sure.
Smoke break.
We need a 15-minute breaker in society. Officially, Don, a 15-minute period in society where we all breathe deeply, hug our family members.
Yeah.
And it's important because right now, like you think about this, and this is, like last night when I was talking to my circle of friends, it's like, what we can do now, and of course there's an earthquake here in Salt Lake the next morning. But what we can do now, right now, is just keep a level head. Keep a level head. Now, a lot of us
that one.
A lot of us at Tackle Trading are really, really prepared because we've been talking about this for the longest time. And so the preparedness level allows people to keep a level head, but just in life and everything, just be prudent, be cautious, think rationally, just think rationally.
Yeah. Yeah. I mean, it's easier said than done, obviously, on a day-to-day basis. I mean, I'm pretty much an even kill dude. I haven't been worked up by this, but yet, when you have markets in turmoil, I mean, Matt, keeping a level head, that's easier said than done. You just said the phrase, good luck with that one, right?
Say again, somebody's won't stop ringing.
Is that you, Matt?
It's me.
Yeah. Anyway, I was going to say, market makes a great argument, keep a level head. It's easier said than done, but we got to do the best we can to do that, right?
You got to be data driven.
Yeah, for sure. All right, let's keep working
right
through.
back.
Yeah, sure. Somebody take over the screen share if you can.
Well, I don't know if we necessarily need a screen share with a closed market, but
We can just talk here for a minute, guys. I mean,
Noah,
I'm
do you
happy-
have your paper trade up?
I do. Let me see if I can still screen. I can't. Matt has to stop sharing.
Hang on. Let me
Make
work
me
my
a host.
Yeah, let me work my host magic back here.
Mhm.
All right. Noah.
Limit down on the halftime report.
Better than earthquake.
Noah, you now have the ability
No,
to
he's
steal the
back.
screen.
He's back.
Oh, he's back.
I'm back.
You back? All right, let's work through some stocks here, talk about some of the news that's going on. Just keep analyzing the market as we always do. I want to bring up a couple companies here, Matt.
Is this the first time we've been live and we went limit down?
I think so.
I think it was.
So,
Yeah.
yeah.
Yeah, this is a historic moment for the halftime show, for sure. We've never had this happen live. Tesla, Matt, they are closing the factories in California. And I do want to talk about this one. Elon.
Wait. Hold on. They're closing, not by choice.
No, they're not. No, the government is saying you are a non-essential business. You cannot continue to work in this fashion, and you are shutting down in the short term. Tesla, this is what a radical just peak to trough here, Matt, from that big blow up over the time. What was your reaction to this one?
Tesla should never have been at $968 in the first place. That's my reaction.
Yeah. I mean, obviously we're in free fall here. The people who were piling in with the FOMO and making all the money going up, they have probably been piling out. Timing here, if you were a trader, I'm sure you could have done some really great things in the last few months. If you're a holder, though, I mean, I don't know what to say. This is not the kind of company I would hold heading into the.
This is what you say. Nobody buys $100,000 vehicle in a recession going through a global pandemic. That's what you say.
Yep. Give me
Matt, I can get it on
XLRE.
credit and I can just borrow a bunch of money to buy.
Unfortunately, the banks want to borrow you the money right now.
They're not.
I'm being sarcastic, but yeah.
Give me a look at XLRE, Matt. Obviously, there have been a lot of conversations about suspending the mortgage payments. You talked about that. Real estate markets are now selling even aggressively here with the market down 5.7% today. Do you think the government should come out and do something for mortgage payments for renters to help alleviate the short-term risk to their income?
How would that impact the banks?
Maybe you can just
It would help. It would help consumers, but I'm very concerned about the banks.
Yeah.
I mean, banks are getting slaughtered today. And all of a sudden you say they don't have to pay their mortgage for the next 3 months. I mean, don't get me wrong. All of us consumers would celebrate, but are we really ready for that radical action yet?
I don't know. I think they did it just in the UK today, I believe. I saw that news come across the wire
But
now.
the UK is in a far worse economic and corona situation than we are.
Mm-hmm. Mark, REITs.
I just want to remind everybody a month ago, the markets were at all-time highs. Okay. So I get it. It's been a free fall. It's very concerning, but are we really just going to say it's okay for the central bank to do everything they're doing for all this fiscal, stimulus coming into the market to run a deficit in America this year alone at $3 trillion? Are we really going to say that's what is needed at this point? Are we really going to suspend people from, paying their mortgage or whatever the case is, and even run even higher deficits? That all of this comes at a cost, guys. It sounds great. Hey, nobody pays their mortgage for 3 months. That sounds fantastic. I would celebrate it too. I have a mortgage the same way you guys do. But are we really there yet?
I think it exposes the underlying lack of financial literacy in this country and people's financial health, Matt. that they cannot last 2 to 4 weeks without starting to panic financially. The idea of losing income for a month and they're looking at not being able to pay the mortgage. I mean, there's a problem. The savings rate in this country has been less than 1% for a very long time. And all this Fed action has literally just pushed equity markets up to all times high and asset markets. And now when we're in a panic and when we're in a condition.
I get it. I get it. But get ready to start paying $1 trillion on our federal deficit out of taxation every year for the rest of your life.
Yeah. Yeah.
Every single one of these proposals that we're hearing comes at a cost to the future generations of America.
Mark, do you have any interest in REITs, real estate at all? I mean, where's the bottom here when we
The only thing, honestly, the only thing I have interest in right now is analyzing companies that have lost 70, 80, 90% of their value, selling naked puts when I believe the company has enough cash to withstand a 6-month shutdown period. Now that's going to be a very, very, very small group. MGM comes to an example. I can start selling naked puts where I could potentially get into MGM at cost basis of $1.50. And so like, if I'm looking at my risk tolerance, I'm like, all right, so if I buy 100 shares of MGM, if I sell a naked put and I get put these shares, am I willing to lose $150 if I'm wrong on the thesis that MGM can withstand? You know, that's the only thing I'm interested in right now. Trying to guess a bottom is, well, we've talked about in the last week, you haven't seen panic yet. I think panic might be setting in when you see Marriott hotels down 30% today. When you see, I mean, and panic doesn't end in one day, right? People just don't wake up tomorrow and be like, oh, I was panicking yesterday, but I'm not panicking today. And so like, if I can make bets on MGM at $1.50 at $2, and I'm like, hey, if I lost that $200, I'd be fine with it. But I have a logical reason based on the data, based on the fundamentals. How much cash do they have? What is their debt ratio? Like if a company has a lot of debt, i.e. a Tesla, oh, screw that. Screw that, in a million years. Can a company without bailout money survive? And that is where my head is right now.
Boeing can't.
Boeing can't survive without bailout.
Boeing cannot survive without that. They're already talking about how they cannot even fund their short-term debt.
So why are we bailing them out then?
Well, listen, and I want to talk about the bailout. There is an interesting thing this morning. Mark Cuban went on this rant about corporate America, saying no buybacks, not now, not a year from now, not 20 years from now, not ever. Jim Cramer said on Twitter, Jim Cramer, CNBC fame, I am so tired of the rich profiting from every cataclysm. This is the time to reset the system in favor of the working person right now. We've been talking about this for a few days.
I said that literally in 2008.
The anti-feel for corporations and bailout is higher than ever. So if you're placing a bet, well, I'm going to buy Boeing at X price because they're going to get bailed out, or I'm going to buy X company because they're going to get bailed out. There has been, in my opinion, no stronger anti-corporate bailout sentiment from left and right than there is right now. So you cannot count on MGM or anyone else getting bailed out as part of your calculation. Can they survive on their own? You have to examine their debt ratio. You have to examine their company.
Well, guys, even if we do bail out Boeing to the tune of $60 billion, how does that change the fundamental flaws within the company, i.e. Boeing?
It does.
Does that change the 737 MAX situation? Does that change the travel situation? Does that change the fact that Boeing had negative order flow for the first time since 1956, literally in January? That doesn't change the equation. Giving Boeing a gift of $60 billion doesn't all of a sudden make it a fundamentally strong company. You still have the weakness. You still have the same leadership. You still have the same vision. So simply because you pump money into it doesn't mean it's going to all of a sudden it's now Apple. It's not what it means. You give the airlines $50 billion. Does that encourage travelers to travel more?
No. And think about it, Mel.
Are we really going to bail out companies to the tune of $50 billion when they've spent $56 billion in stock buyback programs over the last 10 years?
No, and even that bailout doesn't ensure they're going to come back profitable. I mean, look at Delta Airlines today. It's down 23%. The airlines continue to get crashed. They're continuing to fall in free fall mode because 50.
And one of these reasons, Tim, is because they're buying their stock at all-time highs and they're getting slaughtered on the debt transaction. And now we're going to bail them out for being bad traders and bad investors. This is foolish, in my opinion. I can sign up for a consumer package where we say, all right, consumers, this is a nasty situation. You're not going to have to pay your mortgage for the next 3 months. I can understand that. I can understand giving consumers $1,000 in April and $1,000 in May to help the economy from a consumer spending perspective, to help people in this moment of crisis. I support and understand the things that any program that comes out and says we're going to help people, I'm going to say thumbs up. I'm okay with it, even if I would do it a slightly different way. But the bailouts to the airlines, the cruise industries, the travel companies, Boeing and others, this to me is so foolish because it doesn't change the underlying flaw within their business models.
Unbelievable.
No,
You know, market's going to reopen after this 15-minute window here. I mean, what do we expect coming back from this, by the way?
You could have some short covering, could have more panic selling. You're gonna have to wait to see the triggers on the intraday perspective.
Yeah.
I typically see up after the trigger initially. So
That's what we saw in the cash open, although it did gap down 25 points.
it just gapped down. Yep.
But
the gap
you
is
saw the
exactly-
same thing happen here when we came out of limit down here. Initially, the market gapped down, recovered. You're starting to see gap down, come back into that resistance level. It's going to be a fascinating next 3 hours in the market.
There's no doubt about it. There's no doubt about it. And I might not be watching a bit of it. I'm going to get prepared for a potential aftershock on this earthquake here.
yeah, that's right.
We
Here
gotta
in
wrap,
Utah,
guys.
there's no day trading today.
No, take care of your families and get the what's the bug out bag ready, Cody? Got to get that ready.
Bug out bag.
What do you do to prepare for an earthquake?
Like if anyone is an expert out there watching
you
this
know,
right
please
now
let me
live,
know.
please share us in chat because we haven't had an earthquake like
We
this.
got
in a
LA
long time.
people. I'm sure they know. I mean,
So we're scrambling, talking all right, logically, what do we do? We're trying to play we're like new traders that have never traded once before in an earthquake. We have no idea what we're doing and would appreciate any guidance that you have.
It just gapped down and then gapped up.
It's like it's a new market open, right? So market opens can be crazy and really volatile. That's what it's like. It's like, all right.
yeah.
So,
Maddie, there's a lot of
times
companies
coming out of limit down, you have short covering.
Yeah, it looks like it's trying to do that right now. We'll see. It's been a volatile market, guys. It's going to continue to be volatile. I think that should be the expectation. Up, down, back and forth.
Above
Craziness.
7% and then goes back down to 7%. Will it trigger another breaker?
No, and I hope on the once again, I hate even saying anything positive about us at all right now because it feels so self-serving, and for that I apologize. I hope people over the last 2-3 weeks, when we were telling you do not touch industries, no, don't be greedy, don't be stupid, don't think you've had price, industries that can be affected by the virus directly, transportation, consumer services, banks, these type of companies, and they've had the brunt of the impact. And where is the bottom?
My favorite mark was there's a guy 3 weeks ago on CNBC who quoted scripture in a way to encourage people to start buying stocks. And it just amazes me, from the time this happened in late January, we've been trying to get our people to be more cautious, conservative. Our programming has been around hedging and aggressively using cash flow, covered calls to offset some of those long-term investments, collaring trades. Gino's done webinars on, adding cheap insurance products, and because what we're seeing in the numbers and the data, and, obviously nobody here wants to pat themselves on the back for that, but I hope our community has appreciated the commentary that we've had the last 2 months.
Yeah. Matt, there's not much on my mind.
Blake, yes, it is a record, Blake. I've never seen anything like the amount of circuit breakers that have been triggered in the last 2-3 weeks. It is absolutely a record.
4 in 2 weeks.
I don't think, did they even have this exact system in 08? So it would,
They did, but they only hit during the one big day down, like the too big to fail day.
yeah, yeah.
I don't think they had the 7 and 13.
I don't
And
think
well,
they had the same system.
do we still have
They
the
they
10%
adjusted
down
it.
up? Do we still have the 10% down uptick rule?
We have the modified uptick rule.
Modified uptick rule, right? So you know, stocks require an uptick if you get the
If you're down over
10%
10%.
in one day. Yeah. So you
Yeah.
got a modified uptick.
See, and I think that's what they're going to be doing more of instead of shutting down the markets. Is they're going to be trying to control the price action on a daily basis a little bit tighter.
Yeah. Yeah. There's many companies on my mind. We can talk about them today or tomorrow. Matt, big tech, Facebook and Google are talking about using data tracking to track virus outbreaks. I find that to be fascinating. Talk about suspension of privacy, and I'd be willing to do it personally. And I am a big privacy advocate, but in the need of a public crisis, I think we got.
I don't trust Facebook or Google to do that. Not without regulations and oversight.
Yeah, we might need that part of
and
it.
An expiration date, like a hard expiration date.
Yeah.
Yep.
And
Guys, again, tell me one time in history we've given up civil liberties that the government gave them back to us.
No, I know.
Never.
So
Never.
let's not panic and overreact and give up our civil liberties that our country has been founded on for 250 years because the last month has been scary.
Yeah.
I mean, can you imagine Google with that information and being able to use it?
They market to you.
You're driving down the street and you get an alert on your phone. You know, if you turn left here and stop at Panda Express, they have a really good orange chicken.
Yeah. What has Facebook done in the last 10 years to justify that type of trust from the consumer base?
Oh,
Nothing.
Let's see.
All right, then let's not be quick just to give up liberties.
No, I'm not saying we would.
I highly doubt Thomas Jefferson right now in this environment would say, let's give up our civil liberties.
Everyone needs to go watch V right now before they give
for
up their
Vendetta?
civil. Yeah.
Oh, I thought you were talking like V, the Alien 1980s miniseries.
No,
I watched
V
when I was a
for
kid.
Go watch it.
Might want to watch
Tim,
Visa.
before you or anyone else runs out and says, yes, I need to do this, go watch V for Vendetta. And,
Guys, this too shall pass, correct?
yes, that's the thing. Does anyone still not believe that there is a light at the end of the tunnel at some point?
This isn't the Black Plague, correct?
It is not the Black Plague. We believe there is going to be a great buying opportunity. And there's a lot of things we don't know, correct? Absolutely. Which is why
so again, let's not give up our civil liberties that our founders and generations have fought and died for, because the American populace who it doesn't know how to react over the last month. Let's not panic in this environment.
Mm-hmm.
By the way, in this environment, Ralph Lauren did get upgraded today.
Why in the world anybody would?
I don't know that one.
Right now makes no sense to me.
The argument, Tim, I actually read it. The argument was all of this risk was already priced in. It was like, oh my God, that's the dumbest thing I've ever heard in my life.
Hey, I will give you an anecdotal positive corporate news. Bring up Comcast real quick. My father-in-law builds Comcast stores, and they're going to be.
What is the Comcast CM? CSA.
He's been in this kind of space for a long time. He's telling me that their demand for their product right now is off the charts because people working from home need more high-speed internet, things like that. And so you are seeing spikes in demand for some product. Matt, we're waiting to release the podcast this week because Zoom is overloaded with demand. So, I mean, as the economy changes, there will be winners and losers. That's capitalism. It's one of the reasons why I have a problem with these bailouts, by the way. Can't we just let capitalism work a little bit, as things kind of move themselves forward? I don't know. Doesn't seem like they want to in the short term.
You could say the same thing about our civil liberties.
I just want to spend a minute, because we've been talking for a couple weeks about that there will be a buying opportunity. And every time when people will say, well, is this it? Is this it? We've been like, no,
not today.
No. And hopefully people were exercising patience along the way. But when it comes,
Guys, finish your thought, Mark.
It's going to be really, really good. And people that did smart things in the last 6 weeks, being in cash, being patient, focusing on things like day trading, when it comes, there's going to be some really good once in a lifetime, or at least
Mark,
once in a decade.
I was going to say the exact same thing. When this market does in fact start to recover, you're going to have a historical record amount of new money coming into our economic system. A historical number of new money coming into our economic system that is going to be put at play in the stock market. And you're going to have a generational opportunity to make money in that environment. And it's okay to be patient in that environment. Let the dust settle. Let us get past these quarantines. Let's see the economic impact. Let's see some quarterly earnings reports. Let's let that dust settle. Let the volatility subside. But there is going to be a generational opportunity because of how quickly this market turned bearish, how quickly the price depreciated, and how aggressive both the central bank and the federal government has been in their response. And once they establish this as the norm, guys, the central bank's going to pump trillions upon trillions of dollars into this next market cycle. And they will do it for a long time. So yeah, let's get excited for that, but let's be patient while this current situation subsides.
Take a deep breath, right? Maybe take a walk, chill it out a little bit.
I think you need to take a walk.
That's what I need to do right now.
And I get the anxious. I mean, because once again, I'm going to sell a neck and put on MGM down in that $3 range or $2 range, where I'm comfortable if I lost all of the money, an early shot. And then I will be really, really patient as I evaluate and understand companies and do the research, because like, this is when this is all done. This is a price appreciation moment. This is a 2009, because we know, unless there is something about the virus that we do not know, which I don't think there might be something we don't know as far as.
Even if there's something we don't know, the end of the world is not happening.
The end of the world is not happening. We've seen South Korea. Even if you're like, well, I don't trust China, fair enough. We've seen South Korea, and I definitely trust South Korea. We've seen their mitigation efforts be successful. We just don't know when ours will be. And we don't know the damage it's done to the economy and specific businesses, because we were not South Korea. We weren't even close to South Korea on testing, on mitigation, on our speed. So we just have to see this play out. And then when we see that flattening of the curve, when we see all of that fiscal stimulus in, there will be a time, and we'll be all over it with our pro members, what to do here on the halftime report. Just sit on your freaking hands like you should have been doing for the last month.
Or day trade, which is what we've been teaching in a lot of our content. You know, the show last night, I've not caught the replay, Matt. I still got to catch that this afternoon. I was going to sit down and watch.
Keith was on fire. He did a great job.
Yeah. You know, I love that kind of stuff, you know, and there's a lot of our content in the last few weeks. You can go back and watch the archives and the videos to help you get trained on, you know, signals and systems that you can use in this market as you're doing your long-term prep and your waiting and your patience. Matt, take us out here. Last thoughts, if any?
Last thought are, well, I just gave my soapbox moment. So last thought are, Cinemark is closing all of their 345 locations. Guys, that's the start of something. You're going to see more industry start shutting down. I think you're going to see an expansion of the quarantines. We're already starting to see the government come out with a little bit, I was going to say harsher, but they're not. More limited guidelines, right, for how we behave in this environment. It's gonna be a lot of news over the course of the next month or 2 months. So be with us as we break it down on a daily basis.
Sounds good. All right. I gotta chill. Wow. We will be back tomorrow, 12:30 Eastern. I'm going to go and just make sure I'm ready for a potential aftershock on this earthquake and think through the process and go look up some preparedness stuff. Might not even happen. By the way, it's one of the problems with social media and online stuff. I got the text message right before the halftime show, and I don't even know if it's valid information, Matt. I have no idea. But we'll be back tomorrow, 12:30, guys. We'll see you then.